All right, so we're diving into startup funding today. You've sent over a really interesting mix of stuff, articles, case studies, even some book recommendations. So we're going to try to unpack all of that, hopefully give you, a clear picture of what the funding landscape looks like, from like bootstrapping to venture capital and all the stuff in between.
Yeah, I think what's interesting is a lot of what we think about funding gets kind of flipped on its head when you look at how some companies actually did it, you know? Like you think it's all, pitch decks and financial models and stuff, but it's crazy. Sometimes it's as simple as selling like bead jewelry to fund you know, your big dream. It's like the founder of GoPro did that.
That's wild. That's actually the perfect segue into the first type of funding we're going to kind of deep dive into, bootstrapping. So basically using your own resources to, get your business going. You mentioned that you're kind of considering that route.
Yeah. I think it's a path that requires you to be really resourceful and really focused on, getting revenue from day one. You're not relying on, outside investments, so every decision you make has a financial consequence. But that can be a good thing too, because, investors see bootstrapping as a sign of, commitment, resourcefulness,
Yeah.
which can make you even more attractive to them, later on.
Oh, interesting. So it's like this counterintuitive signal, like, hey, we believe in this so much that we're putting our own, skin in the game. But let's be honest, bootstrapping isn't always an option,
Mm.
especially if you need to like scale quickly. So what happens when you get to that point where you need more resources to actually grow?
That's where angel investors come in. So, angel investors are typically individuals. Sometimes they have entrepreneurial experience themselves, and they invest in, really early stage companies. They're taking a risk on businesses that might not have, a long track record yet because they see the potential, right?
Right.
And thinking back to the Dropbox example you sent over, investors were initially kind of skeptical of this whole file sharing idea.
Yeah, they didn't even have a finished product, really. They just had this demo video.
Exactly. But that video like went viral and showed this, massive user interest. It proved that people wanted what they were, offering, which helped overcome their lack of, track record and attract those early angel investors.
So it's not just about the money. Angel investors can also bring expertise and connections, mentorship, right? Like we saw with Airbnb and Paul Graham.
Mm-hmm.
But even with angel funding, things don't always go perfectly smoothly, right? You sent an article about like the challenges of valuation disagreements.
Yeah. And this is where really understanding what your business is worth and being able to, justify it with data is super important. Because remember, valuation it's not just a number, it's a negotiation. Airbnb, like, initially struggled to get investors on board with their valuation because the whole idea of renting air mattresses in strangers' homes, like, seemed kind of out there, right? But they persisted, they presented their growth projections, and eventually they got a deal that reflected their true potential.
Okay, so let's say you've, made it through the early stages. You've got some traction and you're ready to like really scale up. That's when venture capital comes into play.
Exactly, yeah. Venture capitalists are looking for, companies with the potential for huge growth and massive returns. So, think about Uber, right? Their meteoric rise, they got tons of money from these venture capital firms, which allowed them to like expand really quickly, like across the globe. But that kind of funding comes with high expectations and often like a lot of influence from those investors.
Yeah, like you're trading rapid growth for, a piece of your company's control.
Yeah.
And that's a decision you have to really think about, especially, if you're someone who values like autonomy in your business.
Yeah.
What about for companies that like don't fit the mold of traditional venture capital? You sent this article about crowdfunding, which seems like a whole different beast.
Yeah, crowdfunding is really interesting. I mean, it's democratized access to capital. It's allowed all these startups to raise funds directly from like a ton of individuals, usually in exchange for like pre-orders of their product or, early access. So the Pebble smartwatch is a great example, right? They raised millions on Kickstarter, proving the power of community and like churning their idea into a reality.
Yeah, it's like a pre-order marketing campaign and a funding round all in one. It's really cool. It's a way to like validate your idea and build, a bunch of excited early adopters. But not every company is like selling a physical product.
Yeah.
You also mentioned, grants and competitions.
Yeah. Those can be a great option, especially for businesses in, specific industries or those with a social impact focus. Grants are usually non-dilutive, which means, you don't give up equity in your company.
Right.
But they can be really competitive and often come with, a lot of reporting requirements.
It's like free money, but with strings attached. And speaking of strings attached, we can't forget about Theranos, the blood testing company. They got like massive government grants early on, but look how that turned out.
Yeah, it's a good reminder that doing your due diligence is super important for both entrepreneurs and investors, right? It's not just about getting the money, it's about finding the right partners, aligning on values and really building something that's, sustainable for the long haul.
Yeah.
And that brings us to the next part of our deep dive. We're going to talk about some of the challenges you might face in your funding journey.
All right, bring on the challenges. Let's do it. Okay, so, we talk about all these different ways to get funding, but let's be real, it's not always easy, is it? Like, what are some of the challenges that, entrepreneurs might bump into when they're trying to get that money?
Well, I think one of the biggest ones, especially for early stage startups, is, that lack of track record. It's like that, classic catch-22. You need the funding to grow, but investors want to see growth before they give you any money.
It's tough. You'd think having a great idea would be enough, but, investors are looking for a bit more than just potential, right?
Yeah.
They want proof that your idea can actually, work in the real world.
Exactly. And, going back to that Dropbox example, they didn't even have like a fully developed product when they first pitched their idea.
Oh, right. Yeah, they just had that demo video.
Yeah. But that video, it was like a total game changer. It went viral, got tons of signups, and really proved that people were like hungry for this, file sharing solution.
Yeah.
So that early traction, that social proof, I think really helped them overcome that lack of track record.
It's like show, don't tell. Right. Actually, that kind of reminds me, you mentioned in your notes that you're a little nervous about pitching to investors.
Yeah, it's natural to feel that way. I mean, pitching is a big deal. There's a lot of pressure to, get it right.
Oh, absolutely. I think we all get those like pre-pitch jitters.
Yeah. But I think the important thing to remember is that investors aren't just looking for, a perfectly polished presentation. They're looking for passion, conviction,
Yeah.
and, a clear vision for the future.
Didn't Snapchat like have a pretty like unconventional pitch? Something about like disappearing photos, which sounded kind of crazy at the time.
Yeah, they totally did. But Evan Spiegel and Bobby Murphy, the co-founders, they really nailed that pitch. They didn't just talk about the technical features. They told a story. They talked about the future of communication, a future where privacy and ephemerality were, really important. And clearly it resonated with people. It resonated with investors.
It's amazing how like a good story can really make all the difference. So you've got a good pitch, you've got some traction, but you also mentioned that you're anticipating, some potential valuation disagreements with investors. That seems tricky.
Yeah, it definitely can be. Evaluation is basically, figuring out how much your company is actually worth. Sounds simple enough, but it involves, financial projections, market analysis, and a whole lot of negotiation.
So it's not just putting a number on it. It's about how much your company you're willing to give up, too.
Right, exactly. You're trying to, get the funding you need to grow without undervaluing your company and giving away too much ownership. Remember Airbnb? They actually ran into some issues with this early on.
Oh, yeah. I think I read about that.
Yeah, investors initially were having a hard time, grasping the whole concept of renting air mattresses in strangers' homes. It was so new, there wasn't a comparable model for them to, base their valuation on.
Yeah, makes sense.
But Airbnb really cleverly focused on their growth potential. They presented this really compelling narrative about, disrupting the travel industry, highlighting key metrics, like how quickly bookings were increasing, the expanding network of hosts and guests.
Yeah, it's about backing it up with data.
Exactly. That data-driven approach helped them justify a higher valuation.
It's like, don't just tell me, show
Yeah.
me. Okay, so we've got the numbers, we've got the killer pitch, but there's another thing, right? Something that can really make or break a funding deal.
Mm-hmm. Investor trust.
Ah, okay.
Yeah. That's the thing that goes beyond the spreadsheets and the projections. Investors aren't just betting on your idea. They're betting on you, the entrepreneur. They want to see that you're in it for the long haul, that you have the grit and determination to, overcome obstacles,
Yeah.
that you're building something with integrity.
Makes sense. Think about Elon Musk and Tesla. He had so many setbacks early on. I mean, electric cars, reusable rockets, not exactly a safe bet.
Not at all. But, despite all those challenges, Musk's vision, his willingness to take risks, and just his transparent communication style, it really won people over. He didn't, hide from the difficulties. He addressed them head on.
So it's about being genuine, real. you know?
Right. And that authenticity builds trust.
Okay, so we've talked about a lot of potential pitfalls here.
Yeah.
Lack of track record, pitching nerves, valuation disagreements, building trust. It can feel overwhelming, right?
Oh, for sure. But we're not going to leave you hanging. We're going to shift gears now and talk about some strategies for overcoming these hurdles. Absolutely. Because there are things you can do to increase your chances of getting funding, building a successful, sustainable business.
All right, so we've covered the scary stuff. Now let's talk about the good stuff. Like, what are some things you can actually do to, increase your chances of actually getting that funding?
Yeah, I think the key here is to be really strategic and thoughtful, right? Like, it's not just about getting any money, it's about getting the right money from the right people who align with your vision.
Yeah, that makes sense. So where do we even begin?
Well, I think it all starts with having a solid plan. I know those words, business plan, can like make people sweat.
Right.
But, think of it more as a roadmap. It's how you explain your vision, your strategy, your understanding of the market. You even sent over the lean startup, right?
Yeah.
And that's a fantastic resource for building a plan that's, adaptable and focused on learning as you go.
Right. Because things change constantly. You need a plan that can keep up. And speaking of, presenting your plan, you mentioned earlier you were a little nervous about the whole pitching thing. Is there anything you can do to make your pitch stand out?
Honestly, I think it comes down to storytelling. You know, Investors hear pitches all day long. They're looking for something that grabs their attention, something that makes them believe in the problem you're solving, makes them believe in you. Think about, remember Snapchat,
Oh, yeah.
disappearing photos? Seemed kind of crazy, right?
Yeah.
But their pitch, it painted a picture of the future, where privacy and ephemerality were like super important. It was smart. They tapped into something, a cultural shift, and they made investors feel like they were part of something bigger.
Yeah. It's not just about the numbers. It's about connecting with people,
Yeah.
getting them excited. But even with the best story, you still have to prove that, people actually want what you're selling,
Yeah.
you know? Like, how do you show that?
Yeah, and that's where building a strong network comes in and leveraging social proof. Remember the story of the LinkedIn founder Reid Hoffman? He really used his network to secure early investments and get advice from people. So, building those relationships, connecting with mentors, advisors, other entrepreneurs, that can be huge.
It's who you know, right?
But a lot of times, yeah.
Yeah, it's true. But I mean, building a network takes time. Is
Oh, yeah.
there anything you can do that's like a little faster to show people that your thing is like the thing to have?
Well, look at Instagram, right? They got like a ton of users really quickly, and that was really attractive to investors. They didn't just launch a product, they created a movement. They tapped into that desire for like visual storytelling, and they built a community around it.
It's about creating buzz,
Right.
getting people excited organically. And, it's interesting. We've talked a lot about, getting money from other people, but you sent an article about bootstrapping. Even if you plan to raise money later.
Yeah, bootstrapping can actually be a really strong signal to investors.
Yeah.
Because it shows that you're resourceful, that you're willing to invest in yourself, right?
Right.
And that you're committed to building a business that can actually stand on its own. The example of Basecamp, the project management software.
Oh, yeah.
They bootstrapped their way to success and then only later on sought out investment to, grow even more.
So it's like prove it works first.
Exactly. Shows dedication. But even when you're bootstrapping, you still need to be able to, test your ideas. You sent over something about an MVP.
Oh, yeah.
Yeah, a minimum viable product. So it's like a basic version of your product or your service, and it's meant to like get to market quickly and get feedback. Testing those assumptions, learning from those early users.
Like, remember that Zappos story?
Oh yeah, that's a great one.
They started, just selling shoes online and like used customer feedback to like make their product better and better. And now they're, this huge customer-centric company.
Exactly. It's about starting small, learning quickly, and being okay with changing directions if you need to.
Speaking of changing directions, that kind of brings us to our last strategy here.
Mm-hmm.
Knowing when to pivot.
Hmm.
Because sometimes, even the best plans have to be adjusted. The story of Slack, that's a perfect example.
Oh, totally.
They started as a gaming company.
They did, but then they realized that their internal communication tool, it had like way more potential.
So they basically scrapped years of work to do something totally different.
Yeah, pretty brave, right?
That's wild. So what can they take away from that?
Be adaptable. Pay attention to what the market is telling you and, sometimes admit that maybe you were wrong. It's not easy to let go of an idea that you've, put your heart into, but sometimes it's the best way to find success. And remember, even if you have to pivot, it doesn't mean that, the work you did before was a waste. All that experience, all those skills, they're still valuable.
Yeah, that's a good point. Wow, we've covered so much ground. Bootstrapping, pitching, networking, pivoting. There's a lot that goes into this whole startup funding thing. But before we wrap up, I want to go back to those book recommendations you sent. There were some really good ones in there.
Oh, yeah. For like getting into the whole lean startup thing, the Lean Startup by Eric Ries is like the Bible. And then 0 to 1 by Peter Thiel, that's a really different perspective on building a business that lasts. Venture deals, if you want to understand how venture capital actually works, deal making and all that. Then there's the art of startup fundraising. That's like more practical, for navigating the whole funding world today. Pitch anything. That one's really interesting. It's all about like the psychology of persuasion and making a really good pitch. And then lastly, the hard thing about hard things, that one's full of, real world wisdom from someone who's actually done it all.
That's a lot of reading. So much good stuff to learn. So as we wrap up this deep dive into startup funding, what are the key takeaways you'd want our listener to remember?
Honestly, I think the most important thing is to really be thoughtful. Do your research. It's not just about getting the money. It's about finding the right partners, the right fit for you and your vision.
Well said. And remember, the funding, it's just one piece of the puzzle. The real work starts when you take that investment and turn your idea into something real.
Couldn't have said it better myself. Thanks for joining us on this deep dive, and best of luck out there.
We're rooting for you.